Evening all. Happy Monday. Mr. Demi, happy Monday to you.
Good morning to you and good evening to everybody. Well, it may actually, good evening to you, good morning to most other people.
Should we start that bit again?
I think so. Lucky we're not live, so we'll just do it again. And
okay.
Hello, everyone.
So much easier. We've got people all over the world, mate. We can't try and do the timekeeping for everyone, but yeah, no. So it's looking quite light there, mate, for November. What's going on in Old Blighty at the moment?
Do you know, I was saying it's not that bad, the weather at the moment. It's not that cold yet. It's actually okay. You know, like when it gets really, really cold in London, it's harsh in the early mornings. Especially those that walk into the station, get into the office. Nowadays, though, people are working from home, so they're not experiencing it as much.
That's very true.
They're the horrible days.
That's very true. People that haven't lived and worked in London, like my missus, she's got this whole romantic, glamorous notion about London. And I'm like, if you ever lived there, just give it 6 months and you wouldn't want to stay there. You would not want to stay there, especially if you're working in the city, right? Jumping in the tube, or even if you're getting a taxi to work, like the traffic, if you don't go in super early. But anyway, we digress. The one thing, though, that I will never miss, like you say, like for the last 5-8 years, there's been like Indian summers leading up till Christmas, and then it's been nice and cold. That's the one time of the year that if I'm somewhere hot, it feels weird to me. Being somewhere warm for Christmas just feels weird, but I like it, and that's my choice. But afterwards, from January through till mid-March, it just drags balls, doesn't it? Like that's when it gets cold, and that's when you really want it to be hot. It just those 3.5 months feel like about 3.5 years sometimes, don't they?
Yeah, it's not a nice period. I mean, that's the time to kind of go away if you can, but obviously now we have to work with the kids' timetable. Whereas when it's just you and your partner, you can go to Dubai, you can go to Egypt, Cyprus, get a bit of warm weather. But yeah, but some people love the cold, so it's just dependent on the person. I'm not one of those people.
yeah, that's what we have. One of the things we have in common, mate, for sure. So look, guys, obviously we're just having a bit of a chinwag. We haven't really spoken over the last couple of days, but we're live on Facebook, we're live on YouTube, and we're live on ShareVision. So take your pick about how you want to tune in for the show. Pips Like a Pro with me, Gaven, the host, and the man, the myth, the legend, Mr. Andy Demi. He is our resident professional trader. He's going to be breaking down all of the information that we're going to be talking about today, which is basically around when you're trading FX, what are some of the biggest myths that you've heard? And we're going to break down some of the myths and say whether they're fact or fiction. Just going to jump in with a few hellos. So we got Slav live on YouTube. Facebook user, identify yourself. So we've got more new people coming into the group, the Crypto and FX Traders Club. If you're not yet a member on Facebook, check us out there. Apply for the private membership. We'll approve you. Then just click on the StreamYard link so that we can see your name and your face, like Roy, our top gun in the house, who's also live on Facebook. Good day to you as well, Roy. So, and also another Facebook user, I guess you're not going to click on the StreamYard link because you're listening to the show live in your car.
You should commit to it. Pull over and.
Firstly, it's they. Apologize if you're a woman, but I get Andy's point. You should really pull over and register so that we know who you are. But thank you anyway for your dedication. So, Mr. Demi, let's jump into it. What are some of the biggest myths that we want to bust about trading FX? I mean, you hear so many, and we could literally start with many, but as a professional trader, former hedge fund trader, you've made over 6 figures in trades. You've made over $1.5 million in one day trading on the hedge floors. That was hedge fund trading floors with your team. We have to say that. But now coming onto the retail side and helping people kind of achieve their goals and dreams, and just to kind of transition whether you want to have just a passive side hustle or do it full time. What are some of the biggest myths that you're hearing from people that we can actually break down as fugazi right now?
So I think that the biggest myth or misconception is that that brokers are taking your stop outs on purpose. So that kind of is true, but not true. So what do I mean by that? Well, you know, like I used to kind of hear people say, oh yeah, the broker's just done me in, he's taken my stop out, and then the market's reversed, right? That's not the case. But as we've spoken about before, that is part of the game, and you know, taking stops out is part of the game, but they're not personally looking at your stop, and I think that's important to understand. So it's not a case of like, hey, let's have a look at Gaven. All right, he doesn't have a lot of money in his account. Let's wipe this guy out. He stops at 120 or whatever. Let's take it out, and then he's out of the game. It doesn't work like that. So how it does work is that because most people are trading off retail theory and they're kind of following sort of standard technical analysis, textbook theory when they're making their decisions, and I kind of had this conversation with one of our students the other day, and regarding where to put your stop, and because this individual had done some other training which was more like textbook. It was like, well, how many pips below the low should I put it? Like 2 pips, 3 pips, 4 pips, right? And that's the problem. It's that's the problem, is that I know, like, I don't, like, if I know you're a retail trader and you've bought at a certain price, and I know where the last swing low was, I pretty much know where your stop is. I know where your stop is without me knowing, if that makes sense. So that basically means that if I need to take stops out so that I can buy back cheaper, I know that the key turning points as an institution where we need to do that. And so it's a myth in the sense that it's not true that they're specifically gunning for you personally. It's just, if you are not savvy enough to know where your stop should go, then ultimately that's going to happen. But I've really heard so many times people think they're doing it to them individually, but that's not necessarily the case. Although it's a different subject. But it depends also on what you're trading, because then if you're trading, without going into that now, because that kind of isn't really relevant, but if you're trading a derivative of the main product, it can happen then. Like, so then it's not so much a myth, it can actually happen. So in other words, if you're not trading directly with the order books and actually buying a currency against another currency, and you're trading using CFDs or spread betting, in that case, an individual broker can actually manipulate the price. But again, it's not done to you personally. Again, it's done as a way of getting liquidity and basically taking people out. So it's not like, but they can see on their books how many traders have got a certain stop, roughly speaking. So they'll know, okay, this section has got a lot of liquidity. We can just expand, take them out by making the spread a bit bigger. And they're allowed to do that because you're not trading on the real market. You're actually trading a derivative bit.
So on that note, obviously we've kind of side quested and talked about derivatives a bit. So it might be part of the answer to this next question, but just to kind of complete that loop, what is the case? What is the strategy of the brokers? Because let's make it clear that they're not our friends, right? Whatever it is, whatever they may say to us, they're not our friends. They're offering a service and they want to make money from us. But what is their goal? Just to clarify and fully paper over that myth with a fugazi.
Yeah, I mean, look, there's like the general goal is for them to make commissions, right? So that means that they want people to be trading, they want people to be active, and so they clearly, you know, there's two different ways of doing that. You have most people that are bad traders, so they accept that most people are going to blow up their accounts. It's kind of known within the industry that the typical trader will be kind of gone within 6 months. So and that includes refunding accounts. So the 6 month period is when they kind of tend to give up. That's kind of known in the industry of brokers. So let's assume that they assume that most people are going to do that. So they will just, they will essentially be happy for you to trade as much as you can. They'll be happy for you to lose. It's not in their interest necessarily that you're going to be a long-term client. These are the kind of like churners and burners, as they know them. Like, so you put $1,000 in, you try and double up your account, you lose your money, and then you refund it, you go and get some more money and put it back in. And so what most brokers do is they run a B book on you. So they will basically assume you're going to lose and your decisions are going to be wrong and you're going to lose money. So if they run a B book on you, it's certainly not in their interest for you to win, because what that basically means is that when you win, they lose, because they're doing the opposite of you. So in other words, if they're running a B book on you, they want you to lose, because they're making money. Yes, the commissions are going to help, but they know you're going to go refund your account. That's what the statistics say. You'll just go and get more money and stick it into an account again. But so like, you've gone short, they've gone long. That's generally like, unless they know you're a good trader. So let's say 10% of their book, it's actually a little bit higher than 10%, but let's say 10% for this example, will be good traders. So they'll lose money on those guys initially. So if they recognize after a few months, actually this guy is consistent, or this lady is consistent, and they're making money, then they will then stop running a B book on that person, and they will actually start to put them in a different category of client, that actually these are guys that we might want to follow and also look after and maybe give them better conditions. So that's kind of how it works, essentially, because then now they can make money from long-term commissions. Let's make sure we look after this person. Let's make sure their spreads are good. Let's make sure we're not stopping them out, and so on. So it's kind of like that.
Cool. Okay. Well, look, that one's definitely been clarified. What's another big one that you've heard about over your years of coaching people, whether it's groups or individuals? What's another most common one that you would like to either confirm as fact or fiction?
Well, I don't know necessarily if I'd call it a myth, but I think we've seen it kind of on Instagram and the way people portray FX, like it's like everybody's making money, everybody's like, so the people in the know that that's not the case. So people that listen to us, they know that that's not the case. But if you kind of look at Instagram, it's kind of portrayed as like, fast money, easy money. You can make 1,000% very quickly, and people don't understand that, it's like, I did a video, when was it, a few weeks ago, when somebody actually wanted me to turn £1,000 into $1 million for them. Like, and he was very genuine, very serious.
Yep.
Like,
were they filming Only Fools and Horses at the time? It sounds like something Del Boy would say, right? From a TV show.
Well, you know what? It's crazy. But the thing is that I've kind of, that's only just one example. But I've seen people like, for example, the kind of statements that I've heard people say is like, all I want, I'm not greedy. All I want is like £100 a day, right? And I'm okay with that. I can live with that. And then you're like, okay, fine. We won't get into the nuts and bolts of why specific numbers are difficult in FX, right? Because of different reasons. But just putting that aside, that for me, there's a myth that you can specify, like, I'm going to make X amount per day, because you don't know what the market conditions are. You don't know what you don't know if your setup's going to be available. You don't know a lot of things, and also we are trading off probability that is essentially a long-term thing. So, for example, if I take out a coin right now and I said to you heads or tails, and we did it 10 times, well, you would say to me, well, yeah, of course, we're going to get 5 heads and 5 tails. Are we? We don't know, because it's random, right? But if I did it thousands of times, we will, by the law of maths, if it's a fair coin. So it's a bit like that. Like, how can I say I'm going to make £100 a day when I've no idea what's available to me? I don't know if I'm going to get filled on my order. I don't know anything, right? So that's, for me, that's a myth. But then going back to what I was saying, like where people say, oh, I want to make that. That's the first problem, is what I just said. The second issue with that is that they're like, when I ask the question, how much money have you got to invest? And then it's like, well, I can put £500 in. Like, okay, so you think it's okay? You'll be making £100 a day, and you're investing £500. So you're going to be making 20% a day. Like, and then I have to explain, like, how ludicrous that is. Like, they'd be multi-billionaires within a few months if that was with compounding, right? But people don't. It's kind of like they go on Instagram, they see all these crazy posts of people making, these crazy amounts of money with little amount of money, Lamborghinis and all the rest of it, and then I guess, like, for most people that are new, they don't really understand that it's nonsensical to even believe that, when the top hedge funds of the world, or the top investors, would never even dream about doing 20% a day, right? So I guess that's, like, probably another myth.
Cool. Yeah, one that I whilst you're talking about making £100 a day or £100 a day, whatever it is, that generally seems to be the most common number. And obviously, as you show in the training, I'll put a link in the chat after the show. But you show how you can reverse engineer numbers. So we're not saying that you can't do that, but it's based on logic rather than pure facts, pure fiction or pure myth. But another one that I'm hearing quite a lot of is that you shouldn't trade on Mondays, you shouldn't trade on Fridays, and definitely don't trade over the weekends. And no one trades in December. So we can kind of, because of time, we kind of gone into a bit of detail on those two, but kind of just break down those few there, because I know that's another few that people kind of seem to be repeating quite a lot. So if you just want to break those down. So not trading in December, not trading on Fridays or Mondays, and not holding over the weekend, yet they still want to try and make 100 a day in their currency.
Yeah, so firstly, like the 100 a day, it's not a case of, like, you might be able to achieve it over say a 12-month period. So, like, you may have made the equivalent of about £100 a day, but on any given day, you just, as a trader, that's what trading is. It's like being when you run a business, how can you know how much you're going to make on any given day, right? So it's more a case of, like, over time you can average that, and you can obviously average more by scaling up. So absolutely, you can definitely do that. It's just, like, on a day-to-day basis, it's a very naive way of thinking. It shows me when somebody asks that they're very, very new to this game, and they're not really thinking about the realities. In terms of trading in December, it's a good one, because yes, typically you could say, like, liquidity dries up a little bit Christmas, but I can tell you that when I was in the hedge fund, we were there trading even on the 24th. We were in the office half day on the 24th. Yeah, most of it, mostly until the 23rd, there will be activity. 24th, things will start to unwind down, and then the stretch to January. So that kind of period there, but there will be some activity. Like I wouldn't say not to trade. I mean, aside from just have a break, aside from that reason, like if you want to trade, there will be opportunities for sure. There's enough people trading. I mean, realistically, some people you've got to think of it like this as well. Yes, the big players maybe won't be, but most desks will have somebody in the office even on the sort of 27th, 28th, 29th. Like you're not going to be off. It's not that simple. You know, you've got returns to hit. And then there's a lot of people that are on holiday, right? Like retail, that take the opportunity to trade. Like they're off work now. They've got a few days. They want to do some trading. So, yeah, there's definitely seasonality. Like there's definitely months that move different to other months, but I wouldn't necessarily put too much notice of that. I would just focus on just trade the days that you want to trade. And with regards to Mondays and Fridays, look, I kind of get it. I mean, Monday is known to be the lowest liquidity day, and it is, to be fair, because a lot of people are kind of setting up for the week. There also doesn't tend to be a lot of news on Mondays, so you do get quieter days on Mondays. Fridays are normal days. You might get people don't initially open swing trades on a Friday typically, but most of the volume comes from day trading anyway, so it wouldn't be any different. Friday is a high volatility day typically, so yeah, I'd say Monday, yes. Even myself, I don't tend to do much trading on a Monday. It's in FX. I tend to use it to set my week up. But if I see an opportunity as I'm doing that, I will take the trade. But yeah, typically you're not going to get a big move on a Monday. So I'd say that one's probably true.
Cool. Well, look, that is our section over for that. So the facts and the myths. Hopefully we've helped to dispel some of that, especially if you're new. But even if you're a bit more experienced, you've probably found a few golden nuggets in there, especially about the brokers, and maybe it's the first time you've heard about B-books and things like that. So, and if you want to get your computer ready, because we'll jump into the biggest news that's coming up for the week of FX. I'll just go through some of the comments and questions. We've got Nick Papp in the house. Afternoon, chaps. Got Zach in the house as well. This flex culture is madness. That's what Mr. Demi seems to talk about. Yep, that is definitely one of his pet peeves. People trying to make out that you can just become a millionaire overnight. Slav saying, apologies for the little digression. Mr. Host, can we have Pips Like a Pro logo? I don't know what you're on about, mate. It must have been a glitch on your machine because it's been there the whole time. Wink, wink, nudge, nudge. Also, Anita's in the house as well. Good to have you with us, Anita. And it was Tony James listening in the car whilst he's driving. We love that loyalty. We love that momentum that you're building. Yeah. So hopefully you're still with us on your journey. So with that being said, let's jump into some of the biggest FX news of the week. This helps you get a feel for like what Andy's saying. Where is the liquidity going to be this week? Where's the volatility going to be? And let's use that data to then jump in to our FX challenge, which is to find an FX trading setup within 15 minutes, which we've got coming up in about 10 minutes time for you guys. So let's jump into the news.
Yeah, absolutely. So let's have a look and see what we've got out this week. So you can see I've filtered out only high impact news, and I do like to have the grey one selected as well, which basically tells us when where there's bank holidays, because that could spell sort of low volatility. So it's always good to sort of select those two. Some people will have the medium ones selected as well. I don't. I just focus on the high impact ones.
Makes sense.
So yeah. So what have we got? This is obviously UK time, guys. So you have to go and adjust it for your own time zone. We have the monetary policy minutes coming out from Australia, and then Governor Lowe speaking. So this is I'll be asleep during this time. That's kind of tomorrow. And we have, this is always important, guys, for future rate movements and sentiment, that kind of stuff. And then we've got retail sales coming out from the US tomorrow at 1:30 as well. So if we have a look at the numbers, 0.8% previous, expected to be 1%, and 0.7 expected to be 1.2. So yeah, retail sales is a tricky one. Sometimes they get leaked, we notice. So sometimes you get the move before it even comes out. Haven't followed it for a while, but that was the case before. So just look out for that. If the market starts to move just before 1:30, then this comes out. It will probably just reverse. And on Wednesday we have a very important one, CPI. So we had a previous number of 3.1% in the UK, expected to be 3.8%. So this is interesting, especially with this forecast. The UK thankfully did keep their rates the same, but I know some mortgage providers have already started to increase their rates. So essentially they're planning for and expecting a hike in interest rates soon. You can see, I guess they haven't done it. They want to keep stimulating the economy, but as you can see there, the value of our money is going down if you're keeping it in cash, that is, which obviously we don't do. But for those that do keep it in cash, you can see, unless your boss is going to give you a raise, then essentially, if that comes to fruition, then you're 3.8% worse off with the current salary that you're on. So if you're listening to this and you're working, well, you can maybe bring this up in your annual review, but don't get the sack from me. So the next thing is we have CPI month on month coming out from Canada as well, 0.2%. Previous, no forecast there so far. And quiet Thursday, and we have the currency report coming out on Friday. You can kind of have a look at some notes here as well, but again, that doesn't, twice a year, generally mid-April and mid-October, the US Treasury publishes a report to Congress, commonly known as and you can kind of read a bit about it, but it could have some impact there. But from what I can see, these are the big days. Unusually Tuesday and Wednesday seem to be the ones that will be the most volatile, and then we've got a quiet Thursday, and I'd imagine probably a quiet Friday as well. And that's kind of it really for the week.
So with all of that, let's just mention it, because obviously the news that came out towards the end of last week, we haven't spoken about it from an FX point of view. We have about cryptos when we had a little meeting with some of our crypto students towards the end of last week. But let's talk about it here in the open group for Forex. Inflation's gone up. It's had one of the biggest jumps it's ever had in history, right? From X to Y now.
Yeah.
How does that stand with regards to the FX market? Because again, they're printing out another $1 trillion at least minimum. Inflation's gone up, like I just said, by the highest rise ever. How does this kind of play into the world of FX? What does this mean for
we're
FX?
living in strange times. So, with all things being equal, if we weren't in this kind of economic climate, then inflation is seen as a good thing, right? Because it means that there's more money being spent, more demand. Basically means that people are not scared, they're not saving their money, they're going out and buying stuff, right? So that's what normally causes inflation. But because of everything that's gone on, this has really come from stimulus, as you said, like printing money. And so it's a difficult one to judge. When you're looking at not, like I said, normally you'd look at inflation and say, yes, inflation goes up. That's good for sterling. But, you know, you have to question, like, if it is good. So, yeah, it's hard to interpret right now. It is the honest truth. So I think it's more of a comparison versus other nations. How are we doing versus the US, for example? You know, how much are they printing? What's their inflation figures like? And then, you know, and I guess, like, you know, from a fundamental point of view, which economy is doing better? So that's something you can kind of judge by doing a little bit of research, looking at what might happen and so on. But, you know, that's what I think also, if you kind of use the technicals, it kind of helps you avoid that opinion. But it's always good to understand what's actually going on behind the scenes. That's why combining technicals with the fundamentals is kind of important. But yeah, it's I mean, that's a super high number, isn't it? I mean, considering that the standard that most, you know, the standard is keep it at 2%, right? That's the normal. In normal circumstances, it never goes above 2%. And there's always like a push to try and get it to 2%. Now it's like, well, we could be, you know, 3.1, could be hit 3.8, and there's still no interest rate hike, which again, I'm happy about, but, you know, but yeah, quite surprised actually. I thought.
Cool. Yeah. Well, with all of that being said, what's jumping out at you to look at as a currency pair for the FX trade challenge?
So we can, well, if we look at the data, I think it might be worth looking at sterling cable, just based on what we just discussed, based on the fact that I'm saying let's consider the technicals. We don't have the data until Wednesday, so it'd be quite interesting to kind of look at cable. It's been a little while. So that's the one that I would suggest that we go through today.
Awesome. So today's FX trade in 15-minute challenge. So basically, professional trader Mr. Annie Demi is going to try and find a professional trading setup that he's happy to put his name and reputation against. Today we're going to be looking at cable. Is that right?
Yeah, we'll go through cable. I'm just going to bring up charts and we'll get going. Okay. All right. So I'm going to clean all of this up and start again. So I'm just going to have a quick look. I'm going to put the weekly chart, guys, and really kind of see where we are. So let's have a little look. This is what we've been doing. Okay, so in general, been trending down, and we've had a nice recent push up, and you can see we have quite a nice level coming in around here. Really, really nice level, in fact. So this is quite an important level, and you can see the way the weekly bar is going to close now could have a real impact for the next few weeks and months. But one of my kind of, you know, approaches to trading and investing is let's trade what we see, right? Not necessarily what we think is going to happen. So that's why I kind of prefer the technical approach. So what I can see right now versus what I think is that we have an old resistance that becomes a future support. And the fact is we are just kind of at that level now. Now, remember, because we've got a weekly chart, it could also be the case that that we have inflation come out, and maybe it's not the number that the market expected, and maybe sterling will go down. Maybe inflation will be lower. But since the forecast is 3.8, any kind of, if it's between 3.8 and 3.1, you'll just get some noise, like a little bit of noise, and nothing's really new there. But if it's less than 3.1, considering the money printing that's going on, that's going to be really bearish. And so therefore, cable could have a push down. But remember, the data comes out on Wednesday. There's still enough time for this to recover by the end of the week and close above. So one of the kind of strategies that we could implement is we could look to see on the lower time frames where there might be a lower level that we could maybe just see if we can buy for cheap and see if the market's going to hold. So that's kind of what I'm going to be looking for. I'm going to be looking for that kind of opportunity. I'm going to do a little bit of analysis on the weekly, just have a little look to see where there might be some fibs and so on. And have a look at this. This is quite a nice level, actually. I really like that. So if you guys can see where that 1618 is, I'm just going to draw a horizontal line. So this is just for the idea of maybe we might be able to pick up cable cheap, and then it maybe even bounces up, right? Could it go down to 130, 150 and then bounce back up? Absolutely, it could do that, right? So that's just something to bear in mind. But the lower time frames are going to kind of give us an idea, because basically what the lower time frames are, what this time frame is telling me is that this is a buy zone, right? This is a buy zone. So anywhere from where we are to possibly down here, where we have the 1618, but we also have, look at the amount of, I'm just going to highlight these and then get rid of them, support. Look at that. Resistance, rejection, 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 and there, and there, and there. Lots and lots of rejection, even here on the other side acting as support and going up. So these levels here are going to be very, very useful for us when we go to these lower time frames. So 133.66, 131.82. So I'm just going to make a note of those. 131.80-ish, right? Okay, so now I'm going to move on and have a look. And I am going to do something, actually. I'm just going to change this to a daily chart because I don't need the 15-minute chart, just to see if there's anything else that I need to observe here. Let's clean this up. Actually, let's just do this. So I could also do the daily fibs because it's going to give me slightly different swings. And then we'll see if there's also maybe a channel play here. So let's do the fibs first, I think. See if we can get this indicator to do something. Possibly. Is this the right one? Nope. I always forget which one it is. Fibs. Hold on. Let's search for it. Okay. Otherwise, I will do it. Why is it coming up with only my down? Ah, there's the down fibs. There we go. Okay. Let's have a look. Right, so we need it to start from 7286. So let me just make that adjustment. So I haven't loaded up MT4, so just going to use this. Well, that's interesting. That is very interesting. So we had an A, B, C, D. Wow, that's good. So the Fibonacci target on the daily chart is 131.65, which is basically similar to what the weekly was showing us. So that's a really good sign that this area here would represent a very nice. You can see recently as well how it acted as resistance and support. This is a very nice level. So this would be a great pickup if we could get it. Now let's look at things from a different point of view now, whereby maybe it never gets that low at all. So is there a case for maybe a more immediate entry? You can see that's quite a nice reactive channel, resistance support. So if we were to hold here, then we'd be looking at basically a move up to there. So the next thing I'm going to do, guys, I'm just going to have a little look to see if we've got any divergence. Use the MACD for that purpose. And we'll have a little look to see, is there any divergence on these lows? So here's what we do. You can see the market's made a lower low. The MACD has also made a lower low. So there's no divergence basically on the MACD there. So that's interesting. Right, next we will have a look to see if there's anything else that I can see here. And then I'm going to go over to the 4-hour time frame. So at this moment, it's on channel support, and we've had 1, 2, 3 touches. This is the 4th. So what we currently have is really potentially a push up from here. So today, tomorrow, and then we'll see what the data kind of brings out. That's kind of what we're seeing at the moment. But let's see if there's anything else that will give us more clues. I'm going to add stock RSI to this as well. You can see we are oversold. Last oversold went up. This one was a small move. Last one here was there. They did a lower low and then it kind of went up. Okay. So one of the things that you can do is you can wait for this to go back above 20. So you get second alert in, but by that point it'll be too late. So you'd kind of like be looking really right now if we can find something on the lower time frame. So let me have a little look and see what the 4-hour time frame is telling us. And let me so what's quite interesting here is that we have quite a nice reactive line here, so that you can see that it's acting as really nice dynamic resistance, and that kind of comes in here about 134.95. I'm just gonna draw some things here. We remove drawings. I'm going to put in my down fibs here as well, guys, because I want to see where the that's it. That's why that makes sense now. That makes a lot of sense. So the market has hit a D. It's now bouncing. It's come back to its 38, and we have, the 50 moving average, the 618 coming in around here. I must say, like, if you're going to go short something like this, I must say I do prefer that we have like a recent support that can become resistance. So I generally like to look just to the left, and I want to identify, if there's any levels that we can. So there's support right there, which is where we are right now, and then the next one up would be like there, which actually is quite nice because it brings us up to these lines here. So that would be around 135.35. So, and then if the market was to then, go down, so anywhere kind of within this block, it starts to go down. The predicted Fibonacci is there, which if I just put a horizontal line there, that comes in about 132.10. That would be the level, and that would be within our box on the daily chart. So here's the tricky thing. We could short this. If we go to the daily chart, oops. So just to be clear, the current 4-hour chart is giving us a target about there. So yeah, not far off the daily level. Now, if we go back to that 4-hour chart for a second, if you wanted to sell it here, I think it's quite. I mean, it's maybe for those that are a bit more advanced, you could take a small position here and then look to scale in and sell there. Your stop has to be above the A, above this green line as well, for the short trade down there. Alternatively, guys, you let the market do its thing and you plan for a trade possibly to buy down here, or if the market actually pushes up here and then maybe breaks this, then you could start to think, okay, this is going to the top of the channel, and so you can start to trade upwards towards the top of the channel. And if we just go back to that daily chart, so let me remove these. If we look at basically this move here, roughly that kind of angle, if you have a look, if we take this, you can see this is how it's gone up before, right? And so you could just take that, use that, put it there, and that kind of gives you a target around this horizontal level. So I'll show you what that is. One sec. So about there, about 137.20, 32. So ideally you would, you try and buy this down here if it was to come out, but of course it may not. So we're at the bottom of the channel. The other way of playing this, guys, for those that again have the knowledge, is that you can buy an initial amount here where we are right now, but your stop has to be down here if you want to do that, and then stick another order into this here and then see if you can get the bounce. So this one, if you bought here and then it starts to go down, you've only got a small amount. Then the market goes into your ideal buy zone, and then you buy the real amount. Then at this point it comes back. Well, now the initial one is break even. This one is a nice profits, and then hopefully you get your move. So for a swing trade, scaling in is another way of doing it. So, I know some of these things are a bit more advanced, but hopefully that's kind of given you some insight into how you could trade this to, in a sort of, and give you an edge. That's the most important thing. So although I've kind of said, yes, you can sell it here, you could, I would only do a small amount here. Ideally, if you wanted to short this, then I'd be looking to add much more up here. Alternatively, you let the market, you let the market go down to here and you buy it for that swing trade up. Otherwise, let the market do its thing. Let's see what it does. At the moment, it's making lower lows and lower highs. You can see that. If you want to go with higher probability, then you want it to kind of create a high, a higher low, and then you could start to look to buy it as it breaks above this high there. That's like a safer way of doing it. And then you've got that 137 sort of 50 target like that. I hope that wasn't too much, but yeah, that's what I've got today.
When you're dropping bombs, mate. And there's about 2 or 3 different setups in there. So we've got maybe at least 1 day trade in there and 1 longer term swing trade, all applicable for this week, which is great. Monica, hey to Monica, she's saying, hey, Andy, is that a hidden divergence on the 4 hour?
Yeah, there is some divergence here. You're right. Yeah. So absolutely. So you can see that on the stochastic RSI, we have got some divergence there. So the market has made a lower low, and that. So we could also just have a quick look at the MACD to see if that's also got some divergence. Oh, that is the MACD. For some reason, I thought it was stochastic. Yeah, I'm going crazy. Let me add in the stochastic. Yeah, so there's some of the MACD. So that's a good thing. Let me see what the stock RSI is showing. Yeah, okay, overbought. So you can see, look, if you have a look at this, guys, the last few stock RSIs, here, you can see the market has gone down. So the last 3 signals have gone down. So yeah, so it might be a case like you've got that divergence. So it might be telling us, look, we'll probably push up, but maybe we'll potentially push down first. According to this, that would be the case. So it's kind of mixed signals at the moment. So makes that sort of setup a bit harder to take. But as a short-term idea, like you can see, this is a level. People working off a 5-minute time frame, a 15-minute time frame, they could definitely short that here and try and get some pips whilst waiting for the bigger moves. And you can also go back and review if there's been any other divergences to see, how effective they are. But yeah, I can't see anything here. But good spot, Monica.
Good spot, Monica. I'm probably showing my age now. I have no idea what GTG means apart from good to go. Okay, good. That was my guess. I spent the last 30 seconds going, what am I going to guess for this? And then it came to me like an apparition. Snake Trader is saying, amazing, thank you. And Besmir is saying, hey guys, can we watch the replay afterwards? Yes, the replay will be posted onto our YouTube channel at the London Trading Institute. Now, we need something from you guys, pretty please. We've given you our time. We've given you Andy's expertise. We've got 2 lousy likes. Thank you to the 2 people. 1 heart, 1 like. We've got to smash that thumbs up button, guys. So if you're live on YouTube, if you're live on Facebook, please show the channel some love and boost that up to at least double that.
At least 18.
I set a low bar. I set a low bar today, guys. But on a serious note, if you've got value from this, that's your way of just tipping your hat to us. Like we're a little busker on the street, chuck a couple of coins in our guitar case, and we will carry on serenading you whilst you walk to the tube station. But on a serious note, yeah, hit the like and the heart. Mr. Demi's gone the extra mile, broken down that trade setup. We've given you the news. We've broken down some of the myths and dispelled some of the fact and the fiction in trading FX. That was the right way around. I'm glad about that. It's getting late now here. It's almost 11 p.m. That is my cue to go. Andy Demi, is there anything else that you want to say before we leave? I know tomorrow we're back for Crypto Show, Crypto Like a Pro, midday UK time. So basically same time as today. there's a lot more to talk about cryptos, as there always is when we say this every Monday evening. But is there anything you want to say before we leave?
No, I think we're good today, mate. Hopefully that's given people some value. I know, as I said, I know for some people, I do try and keep it simple, but sometimes there's kind of no simple way of explaining something. I guess it just comes down to, if you've got a base understanding of markets, then that won't be too difficult for people to follow. So hopefully you've understood that, and giving you some ideas as to how you might want to trade this.
Exactly. And you have got the replay, guys, so you can watch the replay till your little hearts are content, and obviously just stop it, take some notes, and then just carry on watching it. And that's what quite a lot of people do, and that's a free way that you can learn some more FX trading strategies and get some. It's all right having the knowledge, right? But now it's about applying that knowledge and turning it into wisdom. How can you actually use it to your advantage? And that's why we do this segment for you guys. It's not really so much for us, it's for you guys. So with that being said, we love you very much. Even though you are a grumpy lot of buggers, you've only given us 4 likes or hearts. Come on, guys. Shame on you. With that note, I'm sending you all to the naughty step. We are going to the headmaster's office. See you tomorrow, guys.